To this, Lesaka Technologies' losses narrowed in the recent year ended June, and it has provided significantly higher profitability guidance for the 2025 financial year. Now, the JSE and Nasdaq listed company, formerly Net1 UEPS Technologies, said that revenue increased 11% for the year ended June to 10.6 billion rand. Now, according to the company, the balance sheet also strengthened considerably, with the net debt to group adjusted EBITDA ratio improving. Now, to talk to us more about the company's results, we're joined by Lesaka CEO Lincoln Mali. Lincoln, a very good evening and welcome to the program.
Thank you, Nosipho. Thanks for having me.
All right, Lincoln, let's get into it then. What key factors contributed to Lesaka Technologies' shift from an operating loss to an operating profit in the most recent financial year?
Thank you, Nosipho. I think, just again, a huge thank you to our teams and humbled by the support of our customers. If I think about it, the main engines of our business have been growing very nicely. If I look at the consumer business, we've seen growth in our accounts at about 21% year on year. We've seen growth in our lending at 32% year on year, with growth in insurance at 31% year on year. When it comes to the merchant business, we're starting to see growth in our VAS, which are value-added services, in the micro merchant space, growing nicely at 43%. We're starting to see our card acceptance growing very nicely at 30%, growing in our supplier payments. So our engines of growth are firing on all cylinders, and that's really how the business to move from a loss of 275 million rand operating loss last year to a operating income of 67 million rand. And really, there's a pleasing result for us. We've seen our fundamental EPS moving from a loss of 2.66 a share to a profit of 1.06 rand a share. And as you said, restructured our balance sheet with our net debt to adjusted EBITDA now coming down nicely at 2.5 from the 4.5 last year. So it's been a very pleasing result.
And then I guess the next question then would be, is then how can this success be repeated?
I think that the growth engines are in our underlying businesses. Those growth engines will continue to fire, but we also have inorganic growth as part of our plans. You would have known that we have acquired Touchsides, which gives us a nice entry into the licensed liquor tavern vertical, and we've also acquired Adumo, which is a transformative acquisition for us that gives us a huge entry into the second-tier merchant space. Also, GAP, that's in 24 countries, that's got a very strong space in the hospitality industry. So when you look at all of those things put together, that's why we're able to put up a guidance of 900 million rand to 1 billion rand for EBITDA next year, and revenue of between 10 billion and 11 billion rand next year.
Mm-hmm. And then, on that note, as you've mentioned, the acquisitions then of Adumo as well as Touchsides from Heineken. Talk to us then about, the role you foresee Lesaka playing in the broader fintech landscape in South Africa, given your recent financial successes and growth trajectory.
Firstly, I think that it is now going to be established that we are the leading fintech in Southern Africa in terms of both, revenue and EBITDA. Secondly, I think we are well positioned to influence the change in the regulatory and legislative environment to allow for non-banks to participate fully in the payment system, to lower the cost of transacting, to bring more people into the digital economy, and we also well poised to invest more into the township and village economy and serve more of the underserved. And we also have ambitions to look beyond the South African borders to work in other countries on the continent as we drive, financial inclusion for those who are less served.
All right. And then, talk to us then about, the consumer division's adjusted EBITDA, that increased fourfold to 274 million rand. What specific steps were taken to turn this division into a major profit and cash flow contributor for the group?
It's been a 3-year journey, Nosipho. When we started, this was a cursed burning business, which was unprofitable. We had to reshape the entire business model, move it from a cash dispensing grants business to a proper sales and service oriented business where we attract each and every customer and we try and retain each and every customer. We try and put the right distribution channels for them. We train our staff to treat our customers with respect and dignity and offer them the right products. And out of that, we've seen our customers responding very nicely. With our account growth in our customers, we're able to put together about 326,000 activations this year of accounts that have come to us. We've been able to grow our lending book very nicely, about 32% growth. We now are able to offer these services to people and also insurances. When I look at that business today, it's able to open about 20,000 accounts a month. It's able to lend to about 90,000 people a month. It's able to do about 15,000 insurances a month. And so that's really the kind of business that we've built. We are now able to lend about 1.7 billion rands into the social grant space to pay about 110 million rands of funeral claims to people. So we've turned this from a business that was burning to a business now that is a very good contributor to the group.
And that is, so a positive outcome that is certainly most welcome, obviously, for yourselves. And then finally, Lincoln, you touched on it in terms of growth, but talk to us or give us a glimpse then of the future growth on the African continent.
We are looking at a number of possible targets for acquisition. We've built a very strong team at the leadership level. We've made some changes to our leadership structure. Naeem Kola, who used to be our CFO, is now our group COO. Dan Smith, who used to be associated with us through our major shareholder, Value Client Partners, VCP, is now joining us as our financial director or CFO. So now we've got a team of people who are capable with M&A, but also integrating businesses. So we are looking at acquisitions that will add to our scale, add to our geography, be EBITDA, positive as they come in, and add more solutions to our business. So we think that there is opportunity to grow further within Southern Africa, and so we are looking at those opportunities very, very keenly. Now, some of these will be bolt-on acquisitions that will just add to our scale and solution set, but some of them can be as transformative as the Connect acquisition we did 2 years ago, or the Adumo transaction that we've done now. So we are looking at a number of possibilities because we want to be the leading fintech in Southern Africa.
All right. On that note, Lincoln, thank you so much for taking us through those results and taking us into the future of Lesaka.
Thank you. Thank you, Nosipho. Appreciate it. Have a good evening.
All right. Fantastic. That was Lincoln Mali, Lesaka CEO, taking us through the group's financials after it reported strong improvement in profitability for this financial year.